Hey folks, Nick Shane here looking at Micron. Today is 9/28. It was a bad day in the markets. Let's set the stage. Unlucky for them to report earnings after hours. The Nasdaq fell almost 3% today, 2% on small caps, let's call it 2% on the S&P. So it was a legit bad day across the board. There were almost no green boxes out there. So what of Micron? The last time I did a video on it was early August. I want to say 2nd. So here. And I mentioned two zones. I mentioned 82.5. I said the battle is between 82.5. And look at that. 82.5. That's where it ended after my points. And then now, today's close was at 73, which is 72.5, and that was the other value I mentioned in the video. You can go back and watch the video if you want. Those are the values I put there. I also complained about the fundamentals. Not so much that they're crap. That's not what I'm saying. But they didn't reflect this exuberance. I mean, this exuberance was overkill for the fundamentals that were presenting themselves from the P&L. I can speak to that a little bit later. But I'll start with my conclusion is that, okay, Micron, the dip is where it is right now, is right here after hours. It is a viable dip as long as, number one, I'm realistic and I don't go all in because there are other things that could affect it. The markets are in shambles right now because of headline fears. Everybody's freaking everybody out for whatever reasons. And number two, so I need to have, number two, tight stop. If I lose these, I think there'll be another trigger lower. This is an important level. I'll tell you in a second why. And what could it reach? It could reach 65 because that's a monthly pivot line. I'll show you a little bit later. And also 60 and 57.5 are also in the cards. Doable. I'm not calling for them, but I would stop out so I don't find out how low they want to go. So if I really like the company, I would stop out and I'll get back in later at a lower price. So the third caveat is if I take it for a trade when I catch a falling knife in the morning, I would do so knowing that I would have to book profits on the bounce. I would start booking anywhere near 74 or 75 because I think there's going to be sellers in here and definitely up here. So if I'm lucky and I ride it all the way back to 80, I'm out for a trade. Okay, so why do I not like it fundamentally? I don't hate its fundamentals. I had a misaligning. How should I say? I'm missing the point. This does not represent does not support the P&L that it had. So let me explain myself. I would expect this from Nvidia. I would expect this from AMD. AMD went 10 times its net income in the last 4 years. Nvidia is growing hand over fist. This income statement is not anywhere near the exuberant of results of the other two. So, for example, 20 billion, 30 billion, back to 23 billion before COVID. And then COVID. They held well in COVID. And now a little bit above COVID. Net income, they're trying to fix it to get back to before COVID levels. That was a fantastic year. So, when the CEO tells me things have never been better, this doesn't show me that. I don't know what he said this time. I really don't. So value is important for this company because it doesn't grow, right? When a company grows, I'm not looking for value. I'm looking for growth rate. I would judge its, quote, value from price to sales. In this case, I can judge its PE because it doesn't grow a lot. So I want to know its price to earnings ratio. It's important for a non-growth company. It used to be 7. I remember the last time I traded, it was under 3, the PE. Under 3. 7, 4, 8, 20, 20. So I will give them a pass at the fact that it's high because of COVID, but 20 versus 7 and 8, ignore this one. I won't say, okay, 2018 was fantastic, whatever happened in 2018. Price to sales, let's call it 2, 2, 2, 2, 3, and change. So it's not cheap. That's the easy statement. It is not cheap. It's not crap either. They create a lot of cash from operations, like $8 billion. It used to be a lot more. So the fundamentals are not crap. They just don't show me this. Why is this there? Okay, regardless of, oh, they're going to do this and they're going to do that. Well, they're not doing this or that from the P&L. It's boring, stagnant. Whereas if you take AMD, the P&L looks like the chart. You know, the revenue lines are exploding, the net income line is exploding. Same with NVIDIA. To compare two semiconductor companies, two tech, chip companies. All right, so the chart is not crap either. I could catch the falling knife as long as I have the discipline to keep it small, stop out, and book profits. Now, if I'm taking this opportunity to get long Micron, let me show you a chart that should tell you, hey, don't go all in. Not that it's a bad idea. I should not go all in. This is a monthly chart that shows it over the years. All right, so the dot-com bubble, look at that. That's like, it doesn't get any more perfect than this. So what does that mean? It means that I will put an alert there. Next time it gets there and it takes that out, it's going to high heaven. But we are like miles away from that. Let's talk what I really want to say from this one. Focus on more recent years. Trend is still positive, but this correction, this is where it is right now. It's nowhere near a buyable bottom with force. This month, this is a monthly candle. This is an entire month. They opened the month here, they tried to fall, they tried to rally, and they closed close to the high. Look left. 2018 highs, it took them 3.5 years or whatever to get back and beat it. And it took a pandemic to get them above that. Where it is right now, these are the bottoms I'm talking about. Buy the dip against these bottoms, but if they fail, I don't know how low they go. Visually, 65 is a visual split. Look, that's significant. These two candles are significant. It's exactly the middle of those two, so it should matter on the way down. What else should matter? 55. Why? Because of these tops. These two candles are straight in the middle of this guy, so they may slow down at 60. So 60, 57.5, 55. Those are the levels. 65, this little jag right here, and this one. There will be buyers attempting it here if this fails. There will be buyers attempting them here. So there are buyers at certain points. This is a monthly chart. It just takes away the clutter to think from a helicopter view. A little bit more granular, taking a weekly. Now you see these same candles broken up into 3 different weeks. Where it is right now is important because that whole week, was the base for the recovery for 4 weeks, 5 weeks until now. Now they're back to that base. That's why it's important to hold it. And look, the base right here. And then you have this weird candle during that week. I don't think there was an earnings report during this week. That was a bad jag right there. That candle was too happy. These candles are too happy without an earnings report. I don't think there was one. So they leapt here too fast past a prior fail. But that's for future battles. For now, I could catch a falling knife. I better be ready to stop out. I better not take the all-in situation. I better be ready to scalp out with profits on the way back up. It will need the markets to recover in order to help it with its recovery. Let me ask you this. You're saying, oh, this guy's a freaking idiot for talking about 60 or lower. If the markets correct another 10% from here, you think this doesn't come? I can almost guarantee you Micron will be down here. So sometimes the stock looks great, the company looks great, and then something else happens to cause it to fall. Then you'll come and say, oh, that's because all the markets are falling. Fine. I'm presenting to you the idea that it could happen. I'm not telling you why it's going to happen. I'm just telling you if it falls below here, I'm out. I'll figure out where they want to stop, and I'll retry later. I don't want to ride it all the way down. Now, if you do options, then you could sell puts down here, create income, and leave a buffer. But that needs to have somebody that knows what they're doing and somebody that really wants to own the shares. So the idea is, if I want to own the shares now, I would rather sell puts to own them lower and get paid for it. That'll be safer than buying shares. Only if I can own the shares at a lower price. If I can't, I wouldn't sell puts. That's crazy. All right, Nick's counting out.